Welcome to the first episode of the Autovate podcast. Today, we're going to be talking about the Lithia acquisition of Priority Motor Group, GM agreeing to take on Tesla as their charging network, and a big acquisition between Three Birds and DOS Technology. More on that coming up on the Autovate podcast. Welcome, everybody, to our inaugural Autovate podcast. We're kicking this podcast off because we just feel like there's much too much great information to share just once at the Autovate conference, once a year, or even on the Banks Report. We felt like this was the perfect opportunity to bring more great content to our listeners on a regular basis. Joined today by Cliff Banks. Of course, Cliff is known to be shaken, not stirred, is the creator of the Banks Report, the creator of the Autovate conference, and my guest host on the Autovate podcast. Welcome, Cliff.
Thank you, Nick. Good to see you again.
You know, I like to goof around a little bit, Cliff, because I know some of the topics that you deal with are kind of serious. We find really solid information from you on the Banks Report and, of course, at Autovate conferences. And some of that stuff that we want to jump into right away this week is this whole Lithia Motors acquisition of the Priority Auto Group. Does that now make them the largest auto retailer in the country? Have they leapfrogged to the front?
Yeah, well, actually, they leapfrogged several months ago to the top. I think they actually leapfrogged in 2022. I think by the end of 2022, they had sold more cars than any of the other public dealer groups. And for years, since the beginning, they had been AutoNation's arena. So a little bit of a shuffling at the top. I'll tell you, in 2007, I spent a day with Sid DeBoer, who in Medford, Oregon, at their headquarters. At the time, he was the chairman and CEO. His son now is running the group. And Sid showed me a list, essentially, of 2,000 a spreadsheet that had 2,000 dealerships listed that were targets for acquisition for them. And you know, they were talking about getting over 300 rooftops at some point. Then we hit the recession in 08, 09, 2010. And then obviously, we've gone through the most recent dynamics with all of the COVID related stuff and chip supply stuff. But to give you an idea of what Lithia has been doing, they've, since 2019, have acquired 212 stores. That includes, now, let me put a caveat on that. That includes the 50 store group in the UK that they acquired earlier this year. But 212 rooftops that they've acquired since 2019, the beginning of 2019. Now, since I was with Sid DeBoer in Medford in 07, they've bought 330 plus stores. So very aggressive on the acquisition front.
Cliff, are we on our way to a two group ownership in the country? Like,
no. We've got there's 6 publicly traded franchise dealer groups. Penske Automotive is another one. Sonic Automotive, Asbury, and Group 1 out of Houston, and they've all been somewhat aggressive on the acquisition front recently in recent years. When I say recent, the last 2 to 3 years, prices of, that part of the reason is they've had a lot of capital that they've earned because prices have been so high on vehicles that they have to deploy that capital. So you're either investing that back into your company and the capital or facility upgrades, or they're buying stock back. And AutoNation's strategy has been primarily to buy its stock back. And I think going back to 2017, it's bought over half of its shares back. So at one point it was over 100. They had over 100 million shares, and now it's 50 some million. So they either do the share repurchases or they do the facility or the dealership acquisition. So it just, they all have their models. But I think what we're going to see, obviously, when I say obvious, a continued brisk acquisition field in which we see more regional powerhouses at the private dealer group level.
Right.
There's some private dealer groups. The Morgan Auto Group is come on strong in the last couple of years with acquisitions. They're funded by a big private equity family office out of Baltimore. The Hudson Auto Group is another one that's privately owned, but buying quite a few. So we're going to see much larger groups and regional powerhouses coming out of this.
How does it position some of these groups, big or small, to weather a change in the market? These acquisitions, how does it, I guess, prepare dealerships and help dealerships weather some of these ebbs and flows of prices and stock?
Well, yeah, I think, well, obviously, when you look at a dealership, you see different business lines. You see new cars, used cars. There's financing and insurance, F&I, which is a pretty good profit generator for dealerships. Parts and service, and those are cars always need to be fixed. And I think as we move into the rest of the decade, the big question is what are EVs going to do to that model, both on the service side and on the finance and insurance side. Again, I maintain, I've said this before, that these are the next 5 years are probably going to be the most critical in this industry's history, because we just don't know what it's going to look like. We don't know what the customers are going to do in terms of purchasing EVs. We've talked about this before, Nick. We don't know how well the manufacturers are going to be able to execute on their EV strategies over the next few years. So, and again, it's going to take, I think, at least 5 years before we have any real clarity.
Well, one of the things we do know is this GM Tesla partnership coming just 2 weeks after Ford announces that they're going to start using the NACS charger that Tesla's using. Now, it looks like we're moving towards an overall, at least North American industry standard for charging. So let's kind of switch topics here and talk about the implications of that and how that opens up the charging network for people who now own Teslas, GM, and Ford. That's a big move.
Yeah, it's huge. It kind of completely upends this whole EV charging network battle that's out there. And there's several other networks. I think it raises a question of certainly what happens to them. They're probably I'm sure they're having conversations as we speak about how they can get in on the action. Yeah, listen, Tesla clearly built the best network out there.
Do you think they did that knowing that this would eventually come to a head? Do you believe that Tesla invested heavily on that charging network, knowing that if they built the best, then people would have no choice but to kind of default to them?
Well, that clearly became the charging network clearly became a selling point and the differentiator for Tesla with some of these other EV plays right now. Now, look, they're losing share in California, their biggest market, because you have some other companies that are starting to make some headway there. And no one that takes I don't think that's a surprise to anyone, even Elon Musk. I think as more players get into the market on the EV side, they're going to take some share, but he clearly stands to win in a big way.
Yeah, I saw a figure of like 3 billion, the potential of 3 billion.
Now, on the other side, GM is saying they could save as much as 400 million. They set aside 750 million to build out a charging network. Now they're not going to have to expense it. If I'm a dealer, and I haven't really dug deep into this, but one of my first thoughts when I saw this news really is, what about the dealers that have invested a lot of money in buying chargers based upon their OEM mandates?
Yeah.
And so I'm sure there's going to be some backpedaling and.
Yeah. Well, speaking of this, and I wonder this, and Cliff, maybe you can help me work this out in my head. How do we avoid everything turning to a Tesla monopoly on on charging in this country, in North America. It's if all these OEMs are saying, yeah, we support this charging network, and everybody seems to agree that the Tesla network is the best. How do we avoid just relying solely on Tesla to charge our future cars?
I mean, that's a great question. You know, again, there's so many things at play that I think, aren't even looking at today. One is, some people are talking about the Chinese and the play they're making in Europe. And, one of the risks that we have is that our EVs today are incredibly high priced, and in some cases priced out of the market for most people. And the Chinese have developed several models that are lower priced, mid-level, and lower priced that, they've been able to come into Europe and take a big chunk of the market in Europe. And the fear is, or concern is, they're going to do the same here. So again, it just, Nick, I mean, sometimes I struggle to even know what to write about or what to say with some of this, because there's just so many layers to the EV story, first of all. And second, the uncertainty is incredible. I mean, everyone's making huge bets on this, and we still don't even know what battery technology is going to win out over the next couple of years.
Right.
So,
but I mean, here's the thing, Cliff. I mean, tell me if I'm wrong, but it appears to me that the people who make a decision and commit and move forward seem to be the ones that are ahead at this point in the game. We are on this path of electric vehicles being the immediate future of mobility in the world, and there's no stopping that progress. So you either have to make a decision, pick a direction, and go for it. And sometimes it's a win, sometimes it's a loss.
Yeah. I mean, look, obviously in Tesla's case, that's been true. Now, the other EV startups that have come behind Tesla are all in trouble, including Rivian, Lucid, Fisker, Lordstown. I mean, Lordstown will be done this year. There's no way that play survives. Faraday Future. Now, I've said that before about Faraday, but again, the cash just isn't there for these companies. And I would say even for Rivian and Lucid, who are in a little bit better position, but
yeah,
I could see a world without those players in the next couple of years.
Do you see an acquisition? Do you see an OEM?
Possibly, yeah, maybe, but maybe not. I mean, you have to make the case for why they're needed.
So, Cliff, speaking of mergers and acquisitions, there was a pretty big acquisition just last week involving Das Tech. Tell me about that.
Yes, and just in interest of full disclosure here, Autovate is part of the family of companies owned by Das Technology. Das Technology added 3Birds to its arsenal last week. 3Birds is a longtime company in the automotive retail space. And I say long time, it dates back to 2009. And is a pretty good acquisition for Das Technology. And I think it shows that companies are still looking to acquire if the deal is right and if there's value. And certainly 3Birds brings a lot of value to the company. And, of interest to me also, both companies were female-led and female-started.
Yeah.
So, congratulations to the folks at 3Bird and to the folks at Das getting this one across the finish line. Yeah, that was one deal. Reynolds added a small startup, Autovision, which is going to help their dealers add or be able to acquire used vehicles a little more intelligently, providing more window into that whole acquisition of used vehicles and the vehicle valuation world, which is very complicated. So, in Stone Eagle, which is an F&I company, services company, added a company called Pencil Wrench. Again, another startup, which is going to help dealers accurately provide service updates to their customers. it's a little bit of it'll be an interesting play for them. But I think as the service department and repairs continues to be an important part in the market, I think that's a nice tuck-in. But again, these are tuck-in deals that we're talking about that I think bring value to the buying company.
Well, and what it appears to me too is there's a theme among the three that you just mentioned is data. Data is the key, the key here and the most valuable thing. Fantastic technology and some really interesting ways they're able to gather and almost cleanse data in a way and put it back out the other side that makes it a little bit more usable, a little bit more intuitive, and identify gaps where you may not have seen gaps in your business before. So excited to see where that partnership between Three Birds and DAS Technologies goes. That's pretty cool.
Well, very complementary, very complementary companies, just both in terms of the software and in terms of the customer base. So, and I think what we're going to see are deals along these lines that are admittedly somewhat smaller, but make sense and are more of a tuck-in, more of a value add, rather than the bigger plays that I think were on the table last year that didn't get across the finish line. It'll be a few months before we start hearing rumors again of some of these larger deals potentially happening. There's several large companies looking to exit, Nick, and the time, once the time is right, once the markets become more friendly to those types of deals, we'll see a slew of them.
So, Cliff, this is our first episode of the Autovate podcast. We've been talking about this for a while. I'm just excited that we're doing it. I enjoy talking to you. You are a wealth of knowledge, far above what I could ever match. But I learn something from you all the time, and that's why we're doing this. You are the mastermind, the creator behind Autovate, the brand. You're the mastermind and creator behind Autovate, the conference, which is coming up in Scottsdale at the Mauna Lucia, December 6th. Through the 8th. I was fortunate enough to attend last year's conference, be the MC there.
Yes, you were a huge help with us.
We also have another big announcement too. The Autovate newsletter just launched this week as well. So a lot more Autovate content and information coming out that has been in the works for a while and excited to kindly just put out there.
Right. Yeah, we're looking to. It was always my vision to build out Autovate as a more of a platform for information and data and insights into the automotive space, primarily on the whole acquisition and M&A front. We're putting some of those pieces in place and launching some of those pieces. So stay tuned. We'll have some more announcements coming up. But yeah, the conference actually Wednesday, December 6th through the 8th, Friday at the Omni Mauna Lucia in Scottsdale, Arizona.
Well, good. I'm excited to see the agenda. It's a great conference, and I know you do a really good job at curating the speakers. Everybody on that stage really has some deep insight into the topics that they're brought on to talk about, and it all seems. People are willing to share that information too. It's an environment where good information is shared among everybody because everybody there appears to me to want to help each other succeed.
Yeah. I mean, it's more of when I say informal, it's Q&As on stage, conversations on stage that are not scripted, not really any presentations or sales pitches, and it's primarily CEOs, entrepreneurs, and investors. And dealers who are looking to invest and who are leaders in our space and helping us understand where the industry is going and what dealers need for their businesses so that investors know where to put their money and entrepreneurs know what to build. So it's we're going into our 7th year and it's been phenomenal. A great ride so far.
Awesome. And great food. Again, December 6th through the 8th at the Mauna Lucia Resort in Scottsdale, Arizona. Great place to be that time of year. We look forward to seeing as many of you as we can there. Thank you for joining us for the first Autovate podcast. We hope to do this regularly, and we'll check you out next time.
Thanks, Nick.
Thank you, Cliff.